All of the BTEC Unit 3 Personal and Business Finance Equations. The formula for sales revenue is selling price x quantity sold. The formula for cost of goods sold is the opening inventory plus the purchases, minus the closing inventory. The formula for gross profit is sales revenue, minus the cost of goods sold. The formula for the profit, or loss for the year, is the gross profit, minus the expenses plus other income. The formula for the net profit is gross profit, minus expenses. The formula for the net book value is cost, minus depreciation. The formula for the net current assets is current assets, minus current liabilities. The formula for the net assets is non-current assets plus net current assets, minus long-term liabilities. The formula for the capital employed is the opening capital plus the profit for the year. The formula for the gross profit margin is the gross profit divided by revenue times 100. The formula for the markup percentage is gross profit divided by cost of sales times 100. The formula for the profit margin is profit divided by revenue times 100. The formula for the return on capital employed is the operating profit divided by the capital employed times 100. The formula for the current ratio is the current assets divided by the current liabilities. The formula for the liquid capital ratio is the current assets minus inventory divided by the current liabilities. The formula for the inventory turnover is the average inventory divided by the cost of sales times 365. The formula for the trade payable days is the trade payables divided by the credit purchases times 365. The formula for the trade receivables is trade receivables divided by the credit sales times 365. The formula for the total costs is the fixed costs plus the variable costs. The formula for the profit is the sales revenue minus the total costs. The formula for the total contribution is the sales revenue minus the total variable costs. The formula for the contribution per unit is the product selling price minus the variable costs. The formula for calculating profit using contribution is the contribution per unit times the margin of safety. The formula for the break-even output is the total fixed costs divided by the contribution per unit. The formula for the margin of safety is the actual sales minus the break-even level of output. The formula for the net cash flow is total cash inflow minus the total cash outflow. The formula for the closing balance is the opening balance plus the net cash flow. These are all of the formula for the Unit 3 Personal and Business Finance topic. If you found this video helpful, then consider subscribing.